Here we go. Hey, everybody. My name is John Wires. I'm here with Beth Langston today of Flat Branch Home Loans, sorry. And we are here to talk about the general loan process and loans. I'm sure everyone's fairly familiar with it, but Beth here has been on many of the MAREI meetings, and she's a veteran of the process. So we do appreciate her joining. Before we get into it, we are on episode 24 of the MAREI PartnerCast. So we appreciate everyone coming and watching. Obviously, go and check out marei.org/membership. If you want to check out the membership, the MAREI group is the largest of the KC area, and there are a lot of real estate investors here and businesses that can help you out with your real estate investing. So Beth, thanks for joining us again, and let's go ahead and give people an introduction of who you are and what you do and what type of real estate investors you help out the most for the people that haven't seen you on the MAREI meetings.
Okay, awesome. Like you said, my name is Beth Langston. I am with Flat Branch Home Loans. I have been a member or sponsor of MAREI since 2004.
Oh, wow.
Just a few minutes ago. And I have been a mortgage lender since about 2003 and seen the ups and downs and all in between in the market. And I like to keep my clients and my associates in MAREI updated as to what is going on. I have a flyer that's on the website that goes over many of the services that I can provide to any MAREI member. And that can be different at any time during your house cycle, whether you're, buying for a tenant or flipping or needing to refi off of a hard money loan. There are multiple options that I can help to offer throughout the process. So I don't know if you want to go through some of those options today or
Yeah.
Let's a rate update or
all above. I guess we could start with general news updates as far as the rates, or if you're seeing anything in particular, obviously from government rate standpoint or news that's out.
Sure. Well, in the 17 years I've been doing this, I have not been in a position where rates are so low and values are so high. It has been just a phenomena. It's been awesome for our industry. We have not had any COVID setbacks. We've been 7 days a week since January. It has been unbelievable to have the industry at 300% capacity. So I tell everyone that's trying to refinance, including my investor clients, that it's like taking a herd of elephants and trying to put them through an itty bitty tiny door.
Right.
So that's what we're trying to do. But we at Flat Branch have found a really good way of doing that to help our clients feel secure. Rates right now with the Fed pretty much remaining unchanged last week. At least for my investor clients, we're in the high threes, low fours for investment property refis. Cash out tends to be higher, could be closer to 5% depending on the risk. Mm-hmm. But, I have a lot of people call me up and say, hey, what would be my rate on such and such, duplex property, cash out. And I just tell people, you're going to have to apply because there are about 8 considerations into what goes into your rate. It's not just what's the rate of the day because it's different for everybody. It depends on your credit status, your loan to value, your debt to income ratio, type of property, location, zip code, value, all of those things. So I encourage you to have a good conversation with me regarding if you do want to purchase something or if you do want to refi something into a 30-year loan, let's have a conversation about it and I can at least get you in the ballpark. We're still at 30 days for purchases. A lot of lenders are at 45. So even on investment purchases, if you're wanting to put 15% down or 25% down on a single family, we're at 30 days. If you're wanting to do a refi, our max is at 90 days. So we lock you in so that your rate can't go up, and we'll watch for a rate float down during that time. But worst case scenario, we're at 90 days. So other lenders may tell you that, oh, we're only at 45. Well, that's because they lock you in after underwriting and after you've gone through your first round 45 days into it. So we're all pretty much the same as far as our timelines go, that we're 60 to 90 days on refis. So did you have any other questions regarding like current market issues?
No, that's a good update there. How I know no one can necessarily see the future. In your opinion, how long do you see the rates staying at this level, maybe dropping a bit or increasing? Is there any inclination that way, or is it pretty steady?
We kind of feel like rates are just going to hold steady. We don't see another big drop unless we see any more economic, help that is needed right now with the V-shape, recovery. The Fed has committed to pour more money into the economy. So we think rates are going to, at least till the end of the year, remain unchanged. They weren't real excited about changing rates last week during their meeting. So we will be expecting rates to hover around the same. The election is a huge determination as to how, the Fed will look at this for economic recovery. So we just feel that I'm just telling everybody, lock them if you got them. I don't know historically if we will see this again. I would love to think that we're going to get even lower rates next year. That'd be awesome, but I don't have that crystal ball to know.
Right, things are changing so much. It's tough to see that. Are you seeing a fairly equal split of new loans or I should say, how's the split between new homeowners, real estate investors buying rentals, and then refis? Is it pretty equal? Is one much more?
Right now, my business is still about 60% purchase, 40% refis right now. On investment side, an encouragement that I've given some of my investors is if you have properties that you think your tenants will qualify for, now is one of the best times to sell to a tenant if you think they'll qualify for it, because you already have somebody living in it. You're not going to have that space, between, a sale and a purchase. Your tenant gets the lowest rate possible. You get the highest value possible. So it may be a really good time to sell some of your properties to a current tenant if that is in your strategy. If it's not, if it's going to take a while, I do help with credit repair for tenants. Some things I can do on my own with suggestions from the bureaus that we have these little tools that we can use. But other times I have to send them into formal credit repair. But it is a great way to build your own buyer, whether it takes 6 weeks or 6 months. We're here to help you do that.
Did you say you are also doing HELOCs or second mortgages at all, or?
We don't. At Flat Branch, I do have sources for that. When COVID started, the market pretty much dried up on anything investment property related with HELOCs. It was just too great a risk. My sources on those have not come back yet. If you can get a first HELOC, a first position HELOC on some of your properties, that sometimes that's an answer, but the banks are few and far between right now that will do those.
What has anything really drastically changed for the underwriting guidelines? Is wanting stronger financials or longer processes? Anything significant?
There's a couple of things. Right when COVID started, a lot of lenders had a knee-jerk reaction to make minimum credit scores like 660 or 680. Ours changed to 620, which we're one of the most lenient in the market. So our minimum score requirements are good. On an investor side, I would say that having a audited P&L, if you've been self-employed less than 5 years, that was a huge change because we need to make sure that the money is really there, especially with rent moratoriums and the PPP and the EIDL loans. We have to make sure what is real money versus what is, given money.
Sure.
So, there have been several overlays, but I still have been having several investors get through the process.
Gotcha. Have you had loans fall through last couple months due to the COVID, or is everything
No.
maybe delays at all, or?
I've had other banks delay the process by not getting documentation back to us, for example, like a subordination of a second, that kind of thing. IRS, of course, is very slow. Appraisals are taking minimum 10 business days to get back to us on any type of appraisal.
Okay.
Credit updates are like 10 days. So third-party services are slower, but they still are performing.
Interesting. I mean, I'm seeing it. I'm pretty sure you're seeing it. It's on your side. You see some pretty strong home prices still. Offers coming in pretty strong.
Mm-hmm.
Okay.
Oh, I do. And
are the appraisals matching up with that too?
Not always.
Okay.
I think I encourage the agents that I work with, don't get greedy. Just because, you have comped out a property, let's say at 150,000, and that's strong, and it goes all the way up with price competition to 170. If it can only support the comps at 150, you're going to get a 150 and then end up renegotiating. We are seeing that a lot. Usually the gut instinct of the agent when they list the property is right. Maybe you can get 5,000, but these crazy, escalation offers that are going 20, 30,000, they're not getting them.
Okay, good. There's some rationality out there still.
Yeah.
Yeah, I'm always getting people seem like, yeah, the bank will just match the appraisal with the offer all the time, right? It's like,
no.
I know it seems like it, but I think maybe they're starting to cool down a little bit. I mean,
yeah, and Fannie and Freddie, I will say I hope have learned from the previous experience that it is better to keep a borrower in the house, knowing that the utilities are paid, the property is upkept, and work with them. That's why forbearance is working so well. It is not affecting the borrower's credit. We have been able to help borrowers refinance even while they're in forbearance with certain programs. We've been able to help borrowers go down to a smaller size house while in forbearance. They just have to prove that they're out of forbearance for a short period of time before they buy. So I don't think I am hoping, let's put it this way, I'm hoping the foreclosure impact is not anything like what we had in 2009.
No, that brings us a good topic. What's a percentage you're seeing of probably, I would assume, low foreclosures, but you're seeing some forbearance right now then?
We saw a lot of forbearance in the industries that were severely impacted with no income. And that's what it was put in place for. But now we're on the other side and people are going back to work. We're seeing them either tag that back onto the end and add it for 12 payments, or being able to pay it off in full once they've entered that, into forbearance time period. So they gave them pretty good options, to be able not to make payments for a short period of time, but still be able to maintain their credit rating.
Yeah. And you do make a good point. Obviously, if the bank pretty much owns the property as you are paying payments on it, it's always good to someone at least maintain it.
Right. And, with the insurance requirement different now than it was in 2008, you're required on a purchase to pay your insurance at least a year in advance. So, they learned a lot from mistakes.
Right. Makes sense. Okay. No, I appreciate all the updates there. We'll wrap it up here. What are you offering for tips or advice right now, just for people looking to use your services, whether it's a first-time homeowner or renter, in that aspect? Are you just suggesting, obviously, keep things tight, financials tight, obviously keep that credit score up? Is there anything in particular?
Well, if let's say you have 5 or 6 properties and you just really don't know where you are in the spectrum, you may not be utilizing the capital that you have at a much lower interest rate now. If you got to cash out on one or two properties, to have that cash available for when opportunities do come available to purchase other properties, or if properties become vacant that you need to do rehab on, it's the cheapest money you're going to be able to borrow, I think, for a while. So I do encourage the cash out refis if they want them, or let's say they're at 6% and we can get them down to 4%. That helps with their cash flow. So doing a property overview, I will do a portfolio overview at no charge for any of the investors in MAREI if they want to see what would be smart about taking cash out or moving money around.
No, that's good advice, because sometimes the equity's there until it's not. So sometimes you want to pull it out, and if you need it, or maybe you want to have some cushion. That's a good source to take.
And on a cash out, we'll go up to 75% of the loan to value.
On a rental or home?
On a rental, yeah.
And a home, it would be like, what would be on home? Personal? On
a personal home, you can go up to 80.
Okay.
And even after that, then I do have some associates that will do then a credit line on top of that for an additional 10 or 20% once you've gotten your rate lowered to where you want it.
Okay. Cool. Sounds good. No, that's good information. Good to see what's going out there. Obviously, you're in the thick of it, so definitely appreciate that update. Let's go ahead and give people your contact info, website, number, email, that type of stuff, and we'll close it off.
Okay.
Close it up.
Awesome. The best way to reach me is via cell. My cell phone is 816-679-4000. If you have an applicant, like a tenant that wants to buy, or you're a realtor that needs somebody pre-qual, or you just want to refi property yourself, you can go to applywithbeth.com, and that'll take you to my Flat Branch website. And then all the rest of my contact information, Facebook, and my email and everything is on the MAREI website.
Awesome. Thanks again, Beth.
I really appreciate the invitation. I know so many of the faces there, and I've been missing everybody since we've had to be just online only. So hoping we can get back at it soon.
Yeah, it seems like it. We're getting kind of some of the introverted people. It's kind of a benefit for them because they get to join in. So that's their time right now. But
yeah.
I think some groups are getting to meet up in person here soon. I know some of the smaller groups are starting to do that. So, but other than that, it sounds like people can get a hold of you easy. And of course, if you guys are on the normal MAREI monthly webinars, she's usually on there. Or Kim at least gives her a shout out. So again, appreciate it, Beth. We'll have to get you here in the future. Hopefully, there's nothing crazy that happens that we need.
Yeah.
Urgent update, but appreciate your time. So,
well, really appreciate the invitation.
We'll see you later. Thanks, Beth.
Thank you. Bye-bye.
Bye.